All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today is December 29th, 2025. Once again, we are talking about my favorite of the shiny first thing in the morning. Best way to start your day, isn't it? Silver. What a night. Absolutely wild night. Silver was out partying, woke up next to some other metal that it had never seen before. It's got a headache. It's all kind of like tarnished and toned. Man, it was just a crazy night for metals here. I'm having all kinds of like hangover part 8, visions in my head here. Look, guys, metals started trading last night around 6 p.m. Eastern time, and the market just goes straight up. We closed Friday in the high 70s, like around 79, just ripped right past $80. Oh, and the crowd goes wild. $80 silver. No, 81. Blinking, you missed 82. 83. We peak at almost $84. Silver has gone vertical. My text messages are blowing up left and right. Do you see silver? Yes, I see silver. I see silver all the time. And then it stopped. We saw a huge backwardation open up between New York and London. And by the way, shout out to Bob Coleman, my friend from Idaho Armored Vaults, who came on the channel late Friday on my day off, funny, and to talk about the rip in metals. And one of the things we had noted was that this was different than the shortages that we saw back in the fall, in October and November, that the futures were in contango, as they normally should be. That metal a few months from now was a little bit more expensive than metal right now, as is typically the case. And that therefore this run that we were watching in metals was different than the run that we saw a few months ago. But then last night when trading opened up, we see this huge backwardation appear out of nowhere. In a matter of minutes, the London price rises as much as $1.40 above the New York futures price, which means backwardation, indicative of a physical shortage. Emphasis indicative. It doesn't mean there necessarily is one, because just as fast as that backwardation appeared, slam, it's gone, and it disappeared. And silver futures went right back into contango. I mean, we saw backwardation like this back in October. We saw up to $3 of backwardation at one point, but it was a slow build over many weeks. It got bigger and bigger and bigger. We didn't see it just pop out of nowhere and just as fast disappear. Guys, I don't know what the hell happened last night in the silver market. We have a lot of things. We got a short squeeze going on. We have China has just gone cuckoo for Cocoa Puffs with this ETF in China, where they bid up the ETF to more than 60% above net asset value. Just absolutely wild. So then you've got this ETF going limit down. At the same time, silver futures are still ripping over in China. Things are such a mess here. There's really no way to tell what's going on. A lot of people can guess. We also had new margin requirements were rolled out by the CME group. So, they're trying to tamp down the enthusiasm once again. It's really hard to know what's going on here. And let me just tell you that when it's really hard to know what's going on, it's real easy to just make shit up. And that's exactly what a lot of people are doing. You have to be careful right now. There is so much, pardon my French here, guys, there is just so much bullshit flying around the internet right now about silver. Be careful. Prices are moving fast. When you hear things, it's very easy to get the FOMO and just be like, quick, go hurry up, pile in and buy because I heard a thing. It takes time to verify the accuracy of things you hear online. It takes time to go read the fine print of some story and make sure it really says what the headline says. There's a lot of people are taking advantage of this to push bullshit. One in particular. We don't know who it is, but we're going to talk about that one. Look, gold got in on the move last night. Gold is now down here. Platinum got in on the move. Palladium, huge move lower in palladium today, more than 10%. Copper is along for the ride. Metals are going crazy here. Within the span of the last 12 to 15 hours, we have seen silver trade as high as 84 or just below $84 to as low as 73. I don't know where we go here. The market is digesting a margin increase. Is this the end of the rally? My gut tells me no, we're probably going higher. The gold to silver ratio says we still have room to run, at least relative to gold here. But then again, we're in uncharted territory. There is no handicapping what's going on here. Just be careful And look, we're skeptics here, right? I'm a very skeptical guy. I verify things, and I'm always asking questions. Some might call that paranoid. Okay, that's a legitimate criticism. Don't throw away that skepticism. Don't throw that away just because it's something that you want to happen. Maintain that, because there is just so much BS flying around right now. All right, also going on this morning, we've got some AI stories. SoftBank is buying data center maker Digital Bridge. We don't know any details. Digital Bridge stock is just absolutely ripping on this news. Now, it's kind of interesting that SoftBank is making an acquisition this morning, because late last week was the story about how SoftBank has just days remaining to raise the capital it promised for its OpenAI commitments, and that they were probably going to have to max out their margin loan that they took out against their ARM Holdings shares in order to raise that money to pay for AI. Recall a few months ago, SoftBank sold all of their Nvidia shares in order to raise the capital to make their commitments to OpenAI. So it's kind of weird to see SoftBank out buying somebody else when they're already struggling to raise this cash. The only thing I can think of is, well, if you go out and you buy a data center operator, then you can go ahead and print your own magic AI funny money, and you can pay for OpenAI with data center credits. Maybe that's what they're thinking about doing, right? As soon as you own a data center, then you can take all future deliveries of data center hours and call it money and go buy equity in somebody with it. It's pretty much how the AI bubble prints its own money. Oh, I'm sure that's going to end really well for everybody. We've also got a big story over Christmas break. Nvidia is buying Groq, chipmaker Groq. That is Groq, Groq, not to be confused with Grok on Twitter. Gro is a K or a C. I don't know. The other Twitter AI bubble. This is Groq with a Q, the chipmaker, not Elon Musk's Groq. Nvidia is buying them, but they're not buying them. They're doing one of those acqui-hires, and it's a $20 billion deal. They're basically hiring all the talent away from the company, and then they are doing a non-exclusive licensing deal for the company's intellectual property. So what they're left with is a shell of a company with no people that nobody else can basically do any business with, but they haven't actually bought the company, and so there's no regulatory hurdles to overcome. Nobody can say, Nvidia, you're becoming a monopoly, because, oh, well, we didn't actually buy them. We just hired some people and licensed the technology. The spirit of competition is still alive. Yeah, that's going on this morning. Also, Nvidia has finally bought their shares of Intel. Back in September, Nvidia released that they were spending $5 billion to buy shares of Intel at $23 and change. They actually closed that deal this morning after getting the buy-in from regulators. On the geopolitical front, we have two stories in China here. First, China seems like they didn't really appreciate the whole, we're selling $11 billion worth of missiles and artillery to the Taiwanese. China decided to hold naval drills, Navy and air drills. They're surrounding Taiwan right now. It looks an awful lot like a blockade, but it's just a drill. I don't think this is the Chinese invasion, but when the invasion finally does happen, and it really looks increasingly likely like it's going to happen probably in 2027, it's probably going to start looking like a drill, and then they're just not going to go home, kind of the same way the Russians invaded Ukraine. They held these big exercises, and when the exercises were over, the troops didn't go anywhere. Probably how it's going to play out in Taiwan. Also, we've got a story about China's industrial profits down 13.1% year over year in November. Profit margins absolutely collapsing in Chinese industrial producers. Now, what's their options? The Chinese are doing a lot to try to curtail production in that country, to try to limit the oversupply that is causing these margins to collapse. And of course, if you curtail production, maybe you're not making it, maybe your margins do get better. But if you curtail production, you also have to lay off people. And if you lay off people, now you've got an unemployment problem. And if you're already worried about struggling consumption leading to these collapsing industrial profits, well, layoffs makes your problem worse, doesn't it? Another reason China's got a lot of problems on their hand, guys, that collapsing demographic issue there, which is admittedly happening in other parts of the world as well, but it is particularly bad in China, causing consumer deflation. And there's probably a lot of people out there who are like, you know what, deflation, sign me up. Where can I get me some of that consumer deflation? And I get it, but when you're a country that's hopelessly in debt, that's also not very good. We've got industrialized fraud in Minnesota. This story is wild. Over the weekend, how many of you guys saw that Nick Shirley video about the daycare centers in Minnesota? Holy crap. what's going on there. Millions of dollars being funneled into daycares with no kids. It's just a total industry, a fraud industry has sprung up in Minnesota. And that sound you hear is the government doing absolutely nothing about it. And we've also got some liquidity worries this morning. Two stories. We won't spend too much time on them, but we've got the Central Bank of Turkey is easing monetary policy to shore up liquidity. And there's talk of liquidity stresses in Vietnam for any number of reasons. Just as the Federal Reserve starts up the money printer again quietly, you can see the big print. It's coming, guys. And then we all look over at metals and we're like, gee, I wonder why metal prices are going higher. Hey, you think? Well, we got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button for the YouTube algorithm. You new guys, hit that subscribe button right next to it so you can come back tomorrow and have your coffee with the melon heads as we go through markets every single day. And right now, the S&P 500 is in the red this morning, hit down to 27 points or about 0.39% lower. The Dow is also down 0.25%, about 125 points lower for the Dow. And the NASDAQ is leading the way lower, down 0.61%, 159 points lower for the NASDAQ. Tech is, for whatever reason, not liking the sell-off in metals overnight. Looking at the U.S. dollar, it's pretty much unchanged for the day here, 98.04, up by 2 basis points. Looking over at the bond market, we've got yields are marginally lower this morning. The 30-year Treasury, 4.797%. That is down by 2 points and change. The 10-year yield is at 4.117, off by about 1.5 points. The 2-year yield is at 3.465, off by almost 2 basis points. And the 1 month is at 3.609%, down by about 1 basis point. Looking over at Bitcoin, we are at $87,330, give or take, as priced on Coinbase, off by about $500. Bitcoin remains range bound, but I would add this kind of looks like a pennant continuation pattern. I do think we are heading lower in the long term on Bitcoin, or I should say lower in the short to medium term on Bitcoin. Long term, the jury's still out on that one. Looking over at the commodities board, this is where most of the action is this morning. A lot of red in the metal space. Let's start with gold. Spot gold, 44.02. That is down $130, 2.88% lower for spot gold. February gold futures down about the same amount here. Spot silver, 72.75. Oh my God, guys, we're looking at like almost a $12 intraday range in silver here. Right now, down $6.46 or 8.14%. That's after rising 11% on Friday. Volatility, you think? And look at that high. This is what we hit within a few minutes of the opening, not the opening bell, within a few minutes of trading starting last night. We went as high as 83.98, now sitting here at 72.76. Incredible range here. March silver futures 72.28 after hitting an intraday high of 82.61, currently down $4.88 or 6.33%. Now, we are back into backwardation here. We've got about 50 cents of backwardation. If you look at the spot price in London at 72.78, and then we've got the March price on the COMEX, 72.30. So what we got, about 50 cents worth of backwardation here. Last night, we were in contango when trading started. It blew out to $1.40 in backwardation. Then it went back into contango by about 40 or 50 cents. Now we're sitting here about 50 cents in backwardation again. It's just all over the place here, guys. It's, I couldn't really tell you any one thing that's going on. Now let's talk about a couple of the other metals here because we've got copper. We got an article about copper later on, down 3.8%. Platinum and palladium, look at the move in the PGM metals here. 10.7% lower for platinum. 22.25 after hitting an intraday high of 25.84. More than $300 intraday swing, $360 worth of intraday swing in platinum. Incredible volatility in platinum. Palladium is even worse, down 15.27%, off by $313. Briefly hitting a high of $21.57 before selling off to $1,732. The metals are all over the place. Now, look, let's temper the enthusiasm. We're like, oh, my God, metal has been crushed. The price is sold off all the way down to $72. which is a price most of us would have passed out if we heard a few months ago. So, I mean, still metal's way up on the year here. Things just got a little too, not a little, things got a lot of too far, too fast. And now there's a correction that we all suspected was coming. Is this the big one? Is this the $20 price slam? I don't think so. We just got to wait and see. The market is digesting a margin increase right now. While we're at it, crude oil up 2.2%, $58 even for February oil futures. Looking at the silver chart here, guys, this is 1 minute candles. You can see here is the opening at 6 p.m. Eastern time last night. The price shoots all the way up to almost $84 and immediately reverses, heads lower down to $75. I mean, this thing went, like a $9 swing in a span of about 25 minutes. Had some more volatility overnight, and now we're sitting here down around 72.57. Now that's on the minute candles. Let's get rid of some of the squiggles I just drew and take a look at the daily chart here. And yikes, that is an ugly candle on the daily chart here. That's not looking so good. We're only a few bucks away from a bearish engulfing, which would be quite a big reversal pattern. So the level to watch today would be roughly $71.80. We want to close above that level to avoid that bearish engulfing candle. Also, the gold to silver ratio, we're looking at 60.47 on the GSR, the number of ounces of silver to equal 1 ounce of gold. Overnight, we went as low as 54.3. So gold starting to outperform silver a little bit here, at least for the last few hours. Just one other thing I would point out, guys, let's set this to weekly candles here. You know, I have seen some people in my feed over the last couple of days come out and say that silver looked overvalued. And look, I get it. It's had a quite ferocious move in price. But these are the same people who have been pumping AI Ponzi schemes for the last 3.5 years. So it's really adorable for you guys to even talk about valuation of anything. That being said, we're looking at weekly candles here in the silver chart, and the gold to silver ratio is really the only way to measure whether or not silver is overvalued. In my opinion, it's the best way to measure it. And here we are right here at 60 during the last bull run in 2011, which a lot of people are making comparisons to right now. The gold to silver ratio went as low as 30, which means relative to gold, silver is still fairly valued, certainly not overvalued. We could go with silver could double here with gold trading sideways and still be pretty much right about the level we were at in 2011. So the gold to silver ratio says silver could continue to outperform gold here for a while. And if you want to go all the way back to the Hunt brothers, the GSR went as low as 13 back then. So no, I don't think silver is necessarily overvalued here. I'm more concerned about the velocity of this move than I am the absolute price level. It's just gone too far, too fast. It's too good to be true. One of the reasons a lot of people are saying silver is rising so quickly right now is because of China demand, and there is some truth to that. We got Willem Middlecoop posted this one on X. Record volume in Shanghai silver trading. You can see the volume bars down here. Indeed, incredibly high volume, especially right at the open yesterday. This price is shown, I believe this is in yuan per kilogram, I think is what they're quoting here, this 18,596. So don't worry too much about the number level there. You can just look at the trend here. Big spike in volume before that sell-off started last night. Now, a word of caution, folks. Take a good look, a good hard look at this picture, all right? And understand this. I keep getting this guy sent to me. And I say this guy, this isn't a guy, this is an AI character. I don't know who this is. I don't even know if it's one person, a team of people. I don't even know if it's many independent people or teams that have nothing to do with each other that are all just doing this. But I keep getting this Asian AI silver guy sent to me. And I keep getting these stories, these bullshit stories sent to me. Did you hear that this happened? Did you hear this is happening? In all of these cases, I'm able to trace them back to videos that this a-hole has put out. Whoever this a-hole is, it may not be one a-hole. It may be many a-holes. It may be. But take a good look at this picture and commit it to memory, because the next time you see this guy in your feed, I want you to remember he is a chatbot and he is full of shit. Over the last 3 days, I have seen channels with this AI face come out and say that a GSIB bank had just failed because of silver. That is a materially, easily disproven false statement. You can go to the OCC website, you can go to the FDIC website, and you can see, no, there wasn't a GSIB bank that failed Friday. If a GSIB bank had failed on Friday, it would have been the biggest freaking news in the world in the last, I don't know, many years, since 2008 or maybe since COVID. It didn't happen. And this guy's running videos that say a major bank just failed. And then the other thing he puts out in the last couple of days is very specific information. On Friday at 4:47 p.m., iShares issued a new, what did they say? He said that they issued a new prospectus for the SOV Trust, including, and he quotes very specific language. Again, a materially false statement. iShares did not issue a new prospectus for the SLV Trust on Friday at 4:47 p.m. You can still see the prospectus on the iShares website. It's dated 2022, and it does not include the language that this guy is claiming. This AI chatbot channel, and he's on like 10 different YouTube channels, all these different Twitter feeds. What they do is they take a little bit of truth, a smidgen of truth, something they can get you to agree with, like, oh, I like silver, go higher. And then they slather it in bullshit. Understand, this guy or guys just makes shit up out of thin air. So please stop sending me this crap. All right. And all I can tell you is, like, there is a very powerful emotion that rolls over you. When you hear a thing, you want to run out and make a trade. You want to capture it. You don't want to miss out. Oh my God, the price moved $3 in 15 minutes. Quick, go buy. It takes time to search this and prove that this stuff is BS. Be skeptical. Be careful. That's all I can tell you. And stop sending me this garbage. All right. By the way, a lot of people, a lot of really smart people, a lot of channels that I know and respect and people I've been following for a while have been repeating rumors that I can trace back to this channel. So, like, this goes for you FinTwit accounts out there too. Guys, just be careful. All right. We've also got this story about copper going on this morning. Copper rallies to record near 13,000 in London on supply fears. But again, guys, copper rallied and then copper sold off. Now it's down big. Copper surged to a fresh record close to $13,000 a ton in volatile trading as the London Metals Exchange reopened after the Christmas holiday, extending a stunning end-of-year rally fueled by concerns over tighter supply. Prices jumped as much as 6.6% in the initial minutes of trading, the biggest intraday gain since 2022, but then retreated to trade about 2% higher by mid-morning in London. New York futures declined after rallying 4.7% on Friday while the LME was closed. So, this big move that we're seeing in silver, it's happening in copper too. It still feels like this is all about expectations, said Wu Kunjin, head of base metal research at Min Metal Futures Company, by phone. Some fabrication plants in China, which buy copper and are sensitive to prices, have cut production or even halted after the recent rally, he said. It's kind of interesting to see copper prices rally as we're seeing a lot of copper consumers curtailing their production. It's also important to note we've had a lot of high-profile mines have shut down. Some of the biggest mines in the world have had like collapses, landslides, things like that. So that's curtailing production a little bit. But right now, copper is moving in sync with the other metals, which is lower this morning. And we've got, this is an interesting story as well, although it doesn't seem like it might be related to what's happening in some of the white metals here. South Africa's last manganese smelter says 600 jobs threatened. Shout out to my moderator. Mish caught this one this morning. The operator of South Africa's last remaining manganese smelter said it may have to cut as many as 600 jobs as high power prices undermine the viability of its business. Electricity prices in South Africa. Stop me if you've heard this one. TransAlloys issued retrenchment notices to staff and is running only 2 of its 5 furnaces, the company said, based in the coal-rich town of something I can't pronounce, east of Johannesburg. They said in a statement on Monday, surging South African power prices and competition from China have hit local processors of ferrochrome and manganese, both of which are key ingredients in steel making. The country has about 3/4 of the world's identified manganese ore reserves. We are competing against international smelters whose electricity costs are roughly half of ours, TransAlloy CEO Konstantin Sedovnik said in a statement. That gap makes sustained operations impossible. Glencore's ferrochrome unit said earlier this month it would shutter 2 operations. In November, labor union Solidarity said Samacor Chrome may cut almost 2,500 jobs as it curtails operations. So what's so important about this? The South African power prices and operations getting curtailed all over South Africa. Keep in mind, South Africa produces most of the world's platinum and palladium, like almost all of it. I think it's like 60 to 80% of the PGM metals in the world are produced in South Africa. And power prices, the power grid in South Africa has been a big problem. That's one of the things that is leading to these massive supply deficits in the platinum market that Bob Coleman flagged back in May. Monster call when he came on my channel and said he was bullish platinum. That was right before this big rally started. But it also is indicative of, hey, yeah, we got these short-term volatile things like platinum just getting crushed this morning. But long-term issues like this persist and will lead to years and years of supply deficits and eventually higher prices for those metals. All right, shifting gears from metals to data centers. SoftBank nears a deal for data center investment firm DigitalBridge. Kind of interesting to see SoftBank buying this company on this day. SoftBank is in advanced talks to acquire DigitalBridge Group, a private equity firm that invests in assets such as data centers, according to people with knowledge of the matter. The Japanese conglomerate could announce an agreement as soon as Monday for New York-listed DigitalBridge, the people said, asking not to be identified because the information is private. Terms of the transaction, part of SoftBank's campaign to take advantage of an AI-driven boom in digital infrastructure, couldn't be learned, but shares of DigitalBridge rose as much as 54% in pre-market trading on Monday. They were already up 23% this year through Friday, giving the company a market value of $2.5 billion and an enterprise value of $3.8 billion, including debt at the last close. A final agreement hasn't been reached, and details, including the timing, could still change, the people said. Representatives declined to comment. So SoftBank's buying a data center firm. That's kind of interesting, especially considering this other story. Now, this was from a couple of days ago. SoftBank races to fulfill $22.5 billion funding commitment to OpenAI by year end. And here we are, guys. We're, 2-3 days away from year end, and they still have not done this. And now they're buying somebody else. Does this mean the OpenAI deal is not going to happen? I don't know. SoftBank is racing to close a $22.5 billion funding commitment to OpenAI by year end through an array of cash-raising schemes, including the sale of some investments, and could tap its undrawn margin loans borrowed against its valuable ownership in chip firm ARM Holdings. The all-in bet on OpenAI is among the biggest yet by SoftBank CEO Masa Son, as the Japanese billionaire seeks to improve his firm's position in the race for artificial intelligence. To come up with the money, Son has already sold SoftBank's entire $5.8 billion stake in AI chip leader Nvidia, offloaded $4.8 billion of its T-Mobile stake, and slashed staff. A major pool of capital for SoftBank is its undrawn capacity of margin loans borrowed against its ownership of British semiconductor and software design company ARM Holdings. SoftBank recently expanded its margin loan capacity by $6.5 billion, bringing the total undrawn capacity to $11.5 billion. ARM stock has since tripled from its IPO price, providing SoftBank with additional collateral and headroom to expand its borrowing capacity. Now, this is pretty interesting. SoftBank wants to borrow against their shares of ARM Holdings. SoftBank owns like 90% of ARM Holdings, which means if for whatever reason they need to sell that collateral, say, I don't know, bets in OpenAI go the wrong way or the AI bubble bursts, which is virtually guaranteed to happen in 2026. It's already begun, if you ask me. Well, then SoftBank would be forced to sell their shares of ARM Holdings. And keep in mind, SoftBank is the market for ARM Holdings, right? You ever hear the expression, you are the egg guy or you are the egg man? SoftBank is the ARM man. If SoftBank has to sell their holdings, their shares of ARM Holdings, ARM is going to absolutely crater. So this is interesting to watch. It's one of the few ways SoftBank has left to raise the capital. And meanwhile, they're spending all this other untold money, billions of dollars. We don't know how much on this other company, DigitalBridge. Kind of curious timing here. Another deal in the AI space, Nvidia Groq deal is structured to keep the friction of competition alive, says some analyst who's probably full of it. It's been 2 days since news broke that Nvidia was spending $20 billion to acquire top talent from Groq in what the chip startup called a non-exclusive licensing agreement. Remember, it's not a merger. It's a non-exclusive licensing agreement. Two totally different things. Nvidia, the world's most valuable company, hasn't issued a press release or regulatory filing according to a spokesperson, and is only confirming the context of Groq's 90-word blog post published after the close of holiday shortened trading on Wednesday. While neither company confirmed the price tag, CNBC learned from Groq lead investor Alex Davis on Wednesday that Nvidia had agreed to buy assets from Groq, a designer of high-performance AI accelerator chips, for $20 billion in cash. Now, the important thing is the structure of the deal. As an acquisition, Groq would mark by far Nvidia's largest in its 32-year history. Its biggest prior purchase happened in 2019 when they bought Israeli chip designer Mellanox for close to $7 billion. But Nvidia is instead following a playbook used by other tech giants over the last couple of years, spending billions of dollars to hire top talent in AI and to get access to key technology through licensing agreements. It's a strategy that's been employed by Meta, Google, Microsoft, and Amazon. Nvidia itself previously used the tactic, shelling out more than $900 million in September to hire Fabrica CEO Roshan Sankar and other employees at the AI hardware startup, and to license the company's technology, CNBC reported at the time. Okay, so we didn't actually buy the company. We just hired everybody who worked for them and then licensed the technology. Yeah, you bought the company. By avoiding traditional acquisitions, tech companies have been able to skirt some level of antitrust scrutiny and quickly close deals to bring in people they most covet. This is something that the regulators are looking into, but regulators move at the speed of continental drift, so don't expect any action to be taken anytime soon on that. Meanwhile, Nvidia takes their $5 billion stake in Intel under the September agreement. We're not going to spend too much time on this. Nvidia finally closed the deal. They announced this back in September that they were buying these $5 billion in shares for $23 and change. They actually closed the deal today. Intel stock is actually up by 0.5% here, 36.38. So Nvidia is already looking at a nice gain on those shares. And Nvidia stock, meanwhile, not looking so good this morning, not liking the sell-off in tech, down 1.8%, trading at $187. Full disclosure, I am short Nvidia. Meanwhile, get ready to pay more for electricity, guys. I hope you like higher power prices, because that's what you're getting. Be prepared to keep paying more for electricity. Data centers are getting much of the blame lately for rising power costs, but they aren't the only catalysts. They just happen to be the biggest catalyst, the main catalyst. But yes, they're not the only one. Most Americans are paying more for electricity and need to prepare their wallets for further pain ahead. Data centers are getting much of the blame lately for rising power costs, yet because they use all the power, but they aren't the only catalyst and don't always cause increases. Yes, they do. The reasons our bills are rising are complex and varied. Hurricanes, wildfires, state renewable energy plans, and the replacement of aging or damaged grid equipment are all playing a role. That is also true. Discontent over rising power bills has become a hot political issue that is expected to spill into the 2026 midterm elections. And that's something President Trump is going to regret, attaching himself at the political hip to this AI bubble, especially with power bills becoming a campaign issue. Electricity prices played a pivotal role in New Jersey's governor race this past fall. Democrat Mickey Sherrill, who prevailed, called for freezing rates. Oh, price controls, how novel. Though such a move would be complex, Garden State residential rates climbed 21% in September from the previous year, according to the Energy Department. In Georgia, voter anger over rate increases was a factor that helped two Democrats unseat Republican incumbents on the state's utility commission. Power bills include the cost of generating electricity and delivering it by high-voltage transmission lines and distribution lines in cities. Regulation regarding pricing typically happens at the state level. Shifting factors such as fuel prices and temperatures affect customer bills, and so do storms and wildfires that damage infrastructure. And I would add, guys, that those winter temperatures, we have had already a very cold winter, and it's getting worse here, so probably going to see those prices heading higher. This winter, for instance, home heating costs are projected to jump 9% to about $995 for the season, running from November to March. That's up from a year earlier, owing to colder than usual weather and rising natural gas and electricity prices, according to the National Energy Assistance Directors Association. As for infrastructure, investor-owned utilities are projecting to invest $1.1 trillion in transmission and distribution systems, generation, and gas delivery lines between 2025 and 2029, twice as much as they spent in the previous 10 years, according to Edison Electric Institute. Costs are typically approved by regulators and recovered from various types of customers over time, in other words, higher bills. Next year, regions projected to see at least 5% rate increases include a swath of the East Coast from New York to Florida, pretty much the whole East Coast, along with other states from Wisconsin and Illinois to West Virginia, according to the Energy Department. Higher power prices are coming. Meanwhile, China holds military drills around Taiwan after U.S. arms deal. This is breaking news this morning. We don't need to talk too much about this, guys, but I do want to show you this map here. Let's blow it up a little bit. It's hard to see with the color scheme here. But here's Taiwan and these polygons here. That's where the Chinese are doing their drill. Yeah, they've got the island surrounded. It looks an awful lot like a naval blockade, doesn't it? But this is only a drill. We just sold $11 billion worth of missiles and artillery to the Taiwanese, and it appears the Chinese can't take a joke. By the way, shout out to all you adorable China chatbots that show up in my comments. Thank you for the engagement. Meanwhile, China's industrial profits tumble at the fastest pace in over a year. Oh, that one's going to upset the chatbots too. Profits at China's industrial firms in November fell at their fastest pace in over a year as weak domestic demand offset resilience in exports in another sign of a stuttering economic recovery that backs calls for additional policy stimulus. There's the Keynesians in the press always, every situation. We need more stimulus, definitely. Yeah, governments print and spend more money. That'll solve our problems that are caused by governments printing and spending money. But I digress. Profits fell 13.1% year over year in November, accelerating from a 5.5% drop in October. Yikes. 13.1% year over year decline in profits. That is absolutely brutal. That's according to the National Bureau of Statistics, Chinese government data. So it's a good bet the real numbers are even worse than that. The sharper decline came despite better than expected goods exports and against a backdrop of persistent factory gate deflation, maintaining pressure on policymakers to do more to address chronically soft household consumption. Now, that's important here, those last things. Sharper declines in profits despite higher than expected exports. The Chinese are dumping their overcapacity on world markets. It is pissing everybody off. The Germans, the French, yes, us, even Mexico are putting tariffs on China because they are producing too much stuff and dumping it into their markets, putting their own domestic producers out of business. This is making trade war tensions worse. It's not just a Trump story. Also, that factory gate deflation, that means the Chinese will likely further curtail production. And if you curtail production, well, you're looking at layoffs and softer labor data. And if your problem is being driven by weak domestic demand and you curtail production and lay people off, well, your domestic demand is going to get even weaker. China doesn't really have an easy out here. And one more we're going to do pretty quick here, guys. Critics demand accountability from Walsh amid daycare controversy and fraud allegations. This was a 41-minute documentary I watched last night from this guy, Nick Shirley. Here's kind of a little scene from it. Check this one out, guys. This guy drove all over town. I think it was in Minneapolis, going door to door at these daycare centers, in some cases buildings that had multiple daycares in the same building, and there was not a single child present anywhere in these taxpayer-funded daycares, which means they're just subsidy grifts. These buildings, they were going through the paperwork. Oh, these guys have gotten $3 million in government funding over the last 3 years. You knock on the door, there's nobody there. Or if you can get anybody to answer the door, he's like, hey, I want to put my kid into this daycare. And they look at him like he's got two heads. What do you mean you want to put your kid in daycare? What do you think this is, a daycare? Amazing how much money, what's going on in Minnesota right now, industrial scale fraud. And I can tell you, it's very easy to just wrap this up in anti-immigrant sentiment and turn this into a racial story. It's very easy to wrap this up and say, oh, this is just anti-immigrant sentiment and you guys are just racists. All right, that's the silly talking points that powerful people are going to try to use to make a mess of this story. That is not the story here. The story here is institutionalized fraud, wasting your money. Forget what they look like. Forget where they come from. Fraud is fraud. That's the one thing I would say about this one. But check out that video that Nick Shirley did because it was really wild. And I was just grinding my teeth the whole freaking time. And I just want to say thank you very much to Mr. Grumpa5798. Thank you, Grumpa. He says, if you don't take your profits, someone else will. I'm guessing we are referring to the shiny here. I did take some profits on Friday afternoon. I sold some of my SLV calls. I still have others. When I saw silver go up to almost $84 last night, I was saying, boy, those SLV calls would taste really good right about now. And now that I'm watching silver sell off, I'm saying, why am I really glad I took those profits? Nobody ever got hurt taking a profit, guys. Sell in little chunks, all right? Take some off the table when it's ripping. Yeah, you're limiting your upside, but, it could be 2011. I don't think it is, but it could be 2011. We could go right back where we were, and then we'll all be looking back saying, oh, I wish I took some profits. All right, nobody knows what's going to happen here, but just be smart and be careful. Thank you, Grandpa. Appreciate you supporting the channel, sir. Big Mouth Barry says, but the Asian AI guy says a bank went under and had to borrow $17 billion. I'll stick to Bob Coleman and Jack. Thank you both. Yeah, that was the other thing. I saw a lot of stories about, $30 billion from the emergency repurchase facility. No, that didn't happen either. Another thing Asian AI guy just made up. Again, he comes up with this very specific information. I don't know if it is AI hallucinations or if it's deliberate misinformation. I honestly couldn't tell you. For whatever reason, the algorithm loves this crap. This AI guy is being pushed in my face by YouTube, by Twitter, by Facebook. Every social media platform is pushing this guy out or these guys out. I don't know who they are. If it's one group, if these multiple channels all using the same face are related, I would be surprised if they weren't. But I can tell you a lot of it is just fake, guys. A lot of it is BS. And, I posted this yesterday, and some imbecile on Twitter quote tweets me when I was trying to warn people about this AI guy and says, oh, this guy is obviously short silver. He's so cooked, LOL. And I remember looking at this. I'm like, you a-hole, do you have any freaking idea how long silver I am? I am longer silver than a freaking pirate captain from Treasure Island. Jesus. Sorry. And this is the mind guarding that happens. People are just so walled off to anything contrary to their preferred narrative that I am accused of being a silver short. Do you have any idea how much it's adorable. I'm like, oh, that's cute. And, people are like, this guy literally says every day that he likes the shiny, every freaking day he says that. But I say something that's just a little bit contrary to the preferred narrative. Oh, you must be short silver. Oh, you're so cooked. Oh, the things we read on the internet. It's just wonderful. Look, that's also a very common psychological phenomenon called mind guarding. It's indicative of groupthink. And all I can say, guys, is enjoy this run up in silver, but be careful not to become a cult. All right. We spent the last few years watching the AI guys do it. They don't need company. All right. Keep your heads on. Thank you, Big Mouth Barry. I appreciate the good sentiment, sir. Richard Bell says pie chart USA 4,200 data centers versus world. Greed. I don't have that pie chart in front of me, but 4,200 data centers. Wow. So we already have more private equity firms than we have McDonald's. Do we have more data centers than we have private equity firms than we have McDonald's? I don't know, but that sounds like a fun statistic to go research. Maybe I'll do that. Look, these data centers are just steel buildings that lose money, and everybody's like, they're going to be profitable someday. They are going to last but somewhere between 4 and 6 years. I'm leaning towards 4, but the value in these data centers is in the guts of them. The GPUs that are in them. They're not going to last long enough for these things to ever turn a profit, which means in a couple of years, all these data centers we're building, they're going to turn into Gymborees or what's a Urban Air, Jungle Wonder, these bouncing trampoline places with all the inflatables, because they're these giant freaking steel buildings that nobody knows what to do with because, in the early 2020s, we just built these stupid things, phase 3 profit, and now we don't know what to do. Yep. Incineration of capital. Gotta love it. Thank you, Richard Bell, for supporting the channel. Raymond Sycamore says, wait, is that a silver chart or a meme coin chart? Yeah, silver, gold, precious metals, not supposed to trade like meme coins. Neither are utility stocks. By the way, on this subject of, the meme coins, a lot of people are out there saying what we're seeing is a currency collapse in real time. And there's some truth to that, the currency collapse narrative, right? The reason I got into stacking to begin with was because I saw the money printing, and I know it does lead to currency collapse. But also keep in mind, guys, while life is getting more expensive, power prices are going up, beef prices are going up. We're not seeing 100% year-over-year inflation. In some things we are because of other dislocations. But the move in silver, it has nearly tripled this year now. That's not the currency that has done that. It's not just the currency. The currency has contributed to it, but to just like take a more than 150% move in silver and say it's the dollar becoming worthless. Okay, if the dollar is becoming worthless, then explain why a gallon of gas is still less than $3. Doesn't really hold water, all right? So like, be careful not to just dismiss this as currency collapse. Currency debasement absolutely playing a role. The Fed started the money printer again. I get it. But that's not why silver went to $84 last night. Something else is going on. Thank you very much, Raymond, for supporting the channel. Mr. 4Ps says, people buying metals. I'm buying food and ammo. You? I'm covered. You know, I'm Jack Gamble, and I approve this message. No, when the zombies come, you all can't come hide in my house. Sorry, guys. But I would add that lead is right next to gold and silver and the periodic table for a reason. Don't forget to stack all the metals, guys. Thank you, Mr. 4Ps, for supporting the channel, sir. T.A. Chapman says Jack needs to take another vacation so silver can keep bringing him back. Just when I think I was out, they pull me back in. Yes. Every time I take a day off, silver rips. So maybe I should take more days off. I see where you're going with that, T.A. Chapman. Thank you, sir, for supporting the channel. Hey, T.A. Chapman gifting 20 Nobody Special Finance memberships. Welcome to the Melon Patch, everybody. T.A., I really appreciate that. Thank you, sir. All of you 20 new Melon heads, be sure and say thank you to T.A. Chapman. And a reminder, guys, members get one free super chat a month. Use that, and I will read and respond to your thoughts, questions, concerns live on the air. Nashville Pasta Man says, AI Man or Sam Altman? Who is more believable? I'll take they're all full of shit for 1,000, Alex. Yes. Is there an all of the above option here? All I can tell you is that AI guy, man, and again, let's get that image up on the screen here. Where is he? There he is. Yeah, let's do this here. I know we're going a little out of order. Just take a good hard look at it, guys, and commit that to memory the next time you see that. All right. His last two stories have been absolute, utter bullshit, complete fabrications. That a bank failed and that the SLV prospectus had been changed at 4:47 p.m. on Friday to forced cash settlement. Neither story happened. And again, like, don't feel bad if you get caught up in this, because a lot of really smart people have been caught up in this. A lot of people I really like and I enjoy their feeds have repeated these rumors, and you trace all these rumors back to this chatbot. Just be careful, guys. There's a lot of BS out there. Who's more believable? I'll say AI Asian guy is more believable than Sam Altman, because Sam Altman just gives me the creeps. Well, if I must make a choice. Thank you very much, Pasta Man, for supporting the channel. Nacho Man says, Jack, where's the floor for silver? I think 50. We'll say 48. We were talking about this. And again, like, where's the floor? Keep in mind, guys, vertical moves really hard here. My idea, the only place I see any technical support, again, we're going out of order here, is at $50. And that is where I have to set this to get to that. I think I got to set this to weekly candles, and we got to go all the way back to we got to go all the way back to 1980. In my opinion, support, the only technical support here we have is about $48, $50. The waterline of that 50-year cup and handle. I'm not saying price is going back to $50. I'm just saying if we get like this ultra brutal price slam, 50 is where it would find its footing. That may or may not happen. This big sell-off that we're seeing today, down $6 and change, that's nowhere near as bad as could happen. Maybe it happens. Maybe silver goes to 150 before something like that happens. But right now, you know, it's really hard to chart this one, guys, because we're in uncharted territory. But if I had to give you a number, 50 is the number I'd give you. Thank you, Nacho Man, for supporting the channel. Round trip overstated since TSMC revenue keeps rising. Round trip overstated. I mean, Taiwan Semiconductor's revenue rising. That is Nvidia having the chips built and Google having the chips built, right? Google's TPUs are also being built there. So that's real money being spent at Taiwan Semiconductor. The question is, where is that money coming from? Where is Nvidia getting their money from? Nvidia and Google, they're getting their money from their data center customers. The data centers all lose money, and the customers all lose money. So where then is their money coming from? An endless stream of new investors, which includes Nvidia and Google. So yes, it is round trip, but every round trip, some money leaks out. And it goes to Taiwan Semiconductor, and it goes to the power companies, and it goes to labor costs. So it needs more investment capital, endless flows of investment capital to keep that round trip going. The second that dries up even a little bit, this thing collapses. To be honest with you, not just dries up, the second it stops growing, this thing collapses. And in my opinion, that has already happened. A lot of people just haven't figured it out yet. Thank you, Mr. Is this Jay Shaw World? Thank you, Jay Shaw. Appreciate you being a Melonhead member for 8 months. Expert Ace WTM says, I'd like to say that I'm sorry. My late purchase of silver definitely triggered this downturn. I knew it was you, Expert. You broke my heart. Man, we're doing a lot of Pacino today. That's all right. Shake it off. Walk it off. Guys, look, maybe buying silver at 79 or 77, maybe it marks the top and we'll look back 30 years from now and be like, I still haven't broken even on that. I'm sure people who bought silver in 1980 could probably attest to what that feels like. We've been there before. We've seen that before. Or maybe it goes to 200 before that happens. Or maybe it goes to 100 or 150. Again, I just can't reiterate enough. Nobody really knows. And just be cautious and suspicious of anybody who says, I know where this is going and it's going here because reasons. Nobody freaking knows. All right. Everybody wants to pretend they know. Nobody knows. Thank you, Expert, for supporting the channel. Stripper Monkey. Okay. That's it. Thanks for the visual, Stripper Monkey. He says, how will silver not gap up when U.S. is at 72 and China is at 83? Because China could gap down. The big move that's going on in China right now has been driven by this futures ETF. All right. And that futures ETF went just bananas. There was some kind of a squeeze was created. It was a paper squeeze, and it took that ETF to 60% above net asset value, which means the things that were held in the ETF were only worth about half of what the ETF was trading at. So there's two ways you could do that. The ETF could issue more shares and take the money and then go buy up the assets in order to bring the price down and the value. That would put some upward pressure on the assets. That's typically how ETFs work, but that's not what they did. They said nobody's allowed to buy more of this ETF now. They suspended new issuance, or they suspended new investments in it. They basically took away the buy button of this ETF. And so that ETF has been limit down several days in a row. I haven't checked it today, but it's probably the same thing going on. So right now, the Shanghai price is coming down more in line with what New York and London are doing. Now, that being said, I can't ignore that big gap in backwardation that popped up out of nowhere yesterday in a matter of minutes and then disappeared just as quickly as it appeared. All right. It's hard to look at that and say China didn't play a role in that. So I don't know that metal is getting on planes from London or New York and heading to Shanghai right now. If this arbitrage gap stays for very long, we'll see that. But right now, I don't see any evidence that that's happening other than the price gap. And I do see the Chinese price coming down to meet the New York price. I mean, realistically, they're both moving towards each other, right? The New York price, last night notwithstanding, is heading higher as the Shanghai price comes down. But, you know, the two prices exert an influence on other. One could go up, one could go down is the short answer. And the Shanghai price just went crazy. Like it was a speculative mania is what drove that Shanghai price so high. Buying an ETF that's trading 60% above its net asset value, like that's like MicroStrategy levels of stupidity there. So that's why I think the Shanghai price is probably going to come back down here. But I could be wrong about that one. Thank you very much, Stripper Monkey, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button for the YouTube algorithm. Also, thank you very much to all the super chats. Thank you, guys. Really appreciate that. And you magnanimous Melonheads on YouTube, Patreon, and Buy Me a Coffee. Thank you guys so much for supporting the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.